panelists, now it's time to invite the panelists. I'll read out the name. Mr. Marco Rossini, Responsibility, Social Security Fund. Please put your hands together in welcoming Mr. Marco. Mr. Cashew from Oiko Credit. Mr. Jane Guy Billy from CFS Salad. Welcome, sir.
Thank you very much. Again, my name is Rob Abu, and thank you very much for attending this session on access to finance for the value chain, Cashew. We talked about the Cashew value chain challenges this morning, and I believe one of the main conundrums in this sector, especially at the supply chain level, is the access to finance. Before I start this topic, I'd like to first of all thank the Hotel Business Organization for inviting us. I believe this is an important platform to discuss topics that pertain to the Cashew value chain. I would also like to thank, as an ACA, I'd like to take that opportunity to thank the ACA board, the members that are also attending this conference. Mainly the chairman of the African Cashew Alliance, Tahaf Georgette, from the Benin Republic, but also the ACA board members, particularly Raj Kumar, Tola Fasero from Nigeria, and others, which I'm not going to list all of them. But I also would like to say a big thank you and a hello to the African delegation that we see here. In particular, the delegation from Tanzania, Nigeria, Benin Republic, Kenya, Mozambique, Cote d'Ivoire, and I'm sure I forgot some. I would also like to say hello to the chairman, president and CEO of the NEPC, my good friend Olo Olusegun, and also the CEO of Cashew Board of Tanzania. Thank you all for being here. So with that, let's talk about the financing issues. Apparently, this is a multi-billion-dollar industry. From what I've read on the news, Vietnam, for instance, generated a revenue of about $2.2 billion in kernel export. India also generated about $2 billion in kernel exports. Africa is exporting to India, Vietnam, Brazil, and the rest of the world. And this is about a $1.5 to $2 billion business. So yes, there is, I would say, good reasons why we should be able to finance this channel of value chain. However, we've also noticed a lot of challenges. Challenges at various levels. And I believe one of the main challenges is the fact that this is a value chain which is not organized the way coffee or cocoa or other value chain are organized. There's no market trade in London or in New York for cashew. It remains a lot compared to cocoa, for instance. And therefore, from that end, it is more difficult for the stakeholders within that value chain to raise the proper financing. Now, of course, it all depends on where you are located and what segment of the value chain are you interacting with. We've noticed that India and Vietnam, for instance, have a good support from the financial institutions, especially in the processing, the value addition segment of the value chain. Whereas in Africa, for instance, it's a little bit more challenging. And there are good reasons for that, and I'm sure we'll come to that. So we will try to tackle this issue in 45 minutes. It's a very complex issue, but we'll try to do our best to see how we can address some of those issues. So with that, I'd like to turn my attention to the panelists, and I would like to begin with Mr. Marco Rossi from Responsibility. Marco, you have been involved in the Cashew business for quite some time now, from what I understand. First of all, tell us a little bit more about the company you work for, and how do you see your company involved in the Cashew value chain? Can you share that with us? Do you have any solution for the industry?
Thank you very much. Hello everybody. Yes, I'll try to answer your question. So Responsibility is a private asset manager based in Zurich, but we are also something called Impact Investment Fund, which means that we are looking at projects in different areas. I will get more into details, which are profitable, but where there is also a positive social impact in the region, in the company, and the social environment of the company that we are financing. We have different sectors. The one I work for is sustainable agribusiness. I'm responsible for Africa, and we have a team of 5 investment officers working only in Africa. And there's also a colleague here present with us from our office in Mumbai. So yes, we've been financing the Cashew sector, in particular in West Africa, for the last 3-4 years now. The sector and our financing, our exposure in Africa has really been growing very fast. Our portfolio is some East and West Africa, and we are starting now also in India. I think it's reaching about $30 million, which is not bad from our point of view. There are issues that need to be solved. Let's try. You mentioned before, Roger, that there are probably approximate figures, let's say, about $2 billion of production worth in Africa. And also, again, another approximate figure, there are 2.6 million smallholder farmers in Africa producing cashew. So mathematics is very fast. It's less than $1,000 per smallholder farmers. And this is very rough calculation because we don't take into consideration the cost of transport, intermediaries, etc., etc. So in the end, the amount of money that is going to the smallholder farmers on a year basis is extreme. So what we look as an impact investment fund is also to tackle this issue and to make sure that there is also sustainability throughout the value chain. So as a financier, we really look into the sustainability aspect. In the previous panel, I think it was ours, mentioned this issue. What I'm surprised by looking at other commodities that we finance, coffee, cocoa, very big in our coast, sugar, etc. Everybody's talking about traceability, everybody's talking about certification, woods, rainforest, fair trade. In the cashew industry, I have the impression that this topic is really not relevant. I wonder, maybe because the buyers are mainly in Vietnam and in India, where the customers, clients are not familiarized, probably, but a different story about Europe or North America. So for us, this is a question mark. Okay, would the consumer in Europe and North America be able to pay, or be willing to pay a little bit more for a certification, knowing that there is sustainability throughout the chain, the value chain of cashew? For the moment, we try to analyze it, but it's not crystal clear. It doesn't jump to our eyes. And of course, there are issues when financing. Of course, we all know that there is the thing about financing RCN, so which is basically trading, and carrying. One of the key items for us is that, in particular for RCN, there are traders, big traders, they have a lot of money, they don't need this. On the other hand, we wouldn't mind to finance local organizations in whatever countries that collect the cashew in order to make them available for the traders. The problem is that we cannot finance smallholder farmers. We need aggregators, we need cooperatives, we need SMEs, we need outgrower companies or schemes or something whereby there is a collecting entity and an entity which has a balance sheet, which has a track record, etc., that we can potentially finance. So this is something which within the value chain is still come to this. I'm not talking about processor, I'll come to the kernel processing a little bit later. And in general, I think we heard it before about the fact that contracts are quite often spot, right in the market, right at a very last minute with price fixing, etc. This is also making my life as a financier quite difficult because I don't take security over the land of smallholder farmers in Côte d'Ivoire or in Togo, but I take as a security the commercial contract with the buyer in wherever the buyer it is located, as long as it's a reputable buyer with also a certain philosophy and mindset when procuring cashew from West Africa. But if the contract is signed today for delivery at the end of February, what's the point? My added value of financing of 30 days is not going to go very far. But if those contracts were signed much earlier, and of course with commitment maybe in quantity and quality, not necessarily on price, or maybe pushing a little bit the boundaries a little bit far away, assuring a minimum price. Of course, that there is the upside if the quality is good, if the market is going in a certain direction, but if there is a floor on those contracts, that would allow the financier to say, okay, at least I have a minimum value, I can finance based on this minimum value for delivery in May, June, August, or even next year, to some cases. So this is something that the industry, I mean, just a message that I'm throwing to the floor, and would be very beneficial for us as a financier. Another thing is that in other commodities we heard before, I mean, cashew is becoming quite big, but as you all know, coffee and cocoa, there are sugar, there are futures market, there are arbitration court, and this is also very relevant and very important for us. Why? Because then we can have an idea of where the prices are going, where the trends are going, and how litigation can be solved. In the cashew industry, there are still a large number of defaults. I think everybody probably has experienced some in recent years, and delays or etc. And the fact of having an international chamber of commerce and arbitration clause, and would that be in West Africa? I don't know. Would that be in India? Maybe not, because then. But would that be in Dubai? Could be in India. A super parties type of occasion. Let's avoid London all the time. And so those are just a couple of ideas in the more like on the RCN trade. And then on the moving to kernel, we have been actually quite happy to finance a number of processors in West and East Africa. And for us, this is actually our focus. Why? Because we want to aggregate value in Africa, in the producing country. We want to do the same also in Vietnam and India. We are not deleting those two important players, but we want to add value in Africa. So we do finance the typical working capital, but again, the limitation about the contracts and the long-term perspective of contracts, but we also are financing fixed assets, expansion project of existing plants in a number of countries. It has been challenging, but we achieved it. We did quite a number, and we're looking for more opportunities. One thing in West Africa over the last year, the volumes have been growing extremely fast. There's been also a burgeoning of new companies, which of course startups, and I think my colleagues might have a similar opinion, are always a bit tricky because they can appear today and disappear tomorrow. Balance sheet not being necessarily strong, the track record being weak. So from a financing perspective, this is more it's not easy.
Well, thank you. Thank you. That was quite interesting. So from what I understand, so you are focusing more on the production side and also on the processing side also, to some extent. We've heard this morning that on the production side, there is a huge demand for sourcing or RCN from Africa. So the need is on the other side. It's in India, it's in Vietnam, it's in Brazil. How do you see, is that something that responsibility, for instance, would be willing to tackle? How do you guys can help the barriers in India or in Vietnam to source with confidence the raw material from Africa? Because you are present on the ground, so that you can do the link.
Absolutely. Actually, my colleague Cashew, which is somewhere there, very good, and then you could meet that our stand is from Responsibility Mumbai, and actually we had earlier this week an approval, the first approval from our investment committee for a Indian buyer and processor. So we are tackling by putting a number of billion of dollars, and more clients will come, definitely certainly welcome. And if you can make the link between our West African producer and our Indian/Vietnamese client, and as I said before, what is valid for West Africa or East Africa is also valid for India and Vietnam. And we are happy also to finance, to move into fixed asset financing, long-term financing. We can go up to 6-7 years quite easily.
Wow, that's quite interesting, because as you know, one of the main challenges, especially on the supply side, is the availability of the long-term financing, especially to support the growers. The Growers Association in Tanzania, in Mozambique, or in Africa, West Africa, usually are facing that challenges. They cannot find long-term financing for crop development. So are you telling me that this is something that responsibility is ready to support?
We already did it, and we are able to expand even more.
Then you need to let us know that. You need to communicate more, so that others...
That's why we are here, huh?
Very good. Very good. Thank you. Thank you. Well, let me also bring the other participant in the panel. And I'd like to also give an opportunity to Oigo Great to first of all present your institution, what you do, especially in the cashew value chain, and maybe address the issue of the cost of borrowing. It has been some time quite challenging, especially in Africa, but this is not just about Africa, this is about the value chain as a whole. We all know that when you are based in Singapore, or in Vietnam, or maybe in India, you have a cost of borrowing which range, depending on the size of the company, between say 5 to 7%. If you're small or medium, you may want to borrow at let's say 10 to 12%. The moment you jump into borrowing in East or West Africa, you're talking 17, 20, 30% cost of borrowing. So let me hear about Oigo Credit first.
Okay, thank you. Oigo Credit is a social investor based in the Netherlands. We are a cooperative society, so we have around 52,000 members, and we use to collect funds in the Gulf countries, and we do investments in developing countries. We are better known for the microfinance industry, but since 2010 in Africa, you can say, we decided to diversify in agriculture, and after some studies, we decided to focus first on cashew industry. And when we looked at the cashew industry, we analyzed about this value chain and decided to take, let's say, a champion's approach. And the champion in this value chain we found is the processors. So we start dealing with the processors, and now we are in partnership with a consortium of three, but now it's four, processing firm in Benin. I'm talking about Benin Gold Cashew Industries. And yes, the interest rate is an issue in the West Africa region. And we can say the Wameo region because we have the same problem that in East Africa when you take Nigeria or Ghana. Those two countries are quite special in West Africa. When we take Benin, Togo, the certified zone is quite stable. But at auto credit, we can grant loan both in local currency or in hard currency. So the interest rate can vary when you want to take your loan in local currency. You can have it at a higher interest rate, between 10 and 12%. But when it is in hard currency, you can get your loan at a lower interest rate. So when we take the cashew industry, we can say that as the market is not, especially in Africa, but in US and Europe, there is a possibility working with auto credit to have your loan in hard currency and then to benefit from lower interest rates. But at the same time, when you look at the size of the processors we have in this region, they are very small processors and they are dealing with some issues about profitability. You know, the public infrastructure are very weak and they have some quite high cost of production. Also, they are not very used to the international market prices, tracking, and everything. So, in addition to loan, we found out that they need some capacity building. And we decided to not go only with the money, but also with capacity building. And when we combine the cost of our resources and the capacity building costs, we are not yet at the point we expected to be when the loan are in hard currency. So the problem is still there. And recently, we also identified that in addition to borrowing, our partner would like to have equity investment. So we are willing to link them with our equity team and then to have some more stable, longer time and less costly, I can say, fund. We have also to mention that the cashew industry in West Africa is we have some third parties who wrote the work, facilitate our intervention in this sector. We can talk about the ACA and the African Cashew Initiative and other international local NGOs. For example, in Benin, we have the Belgium Cooperative, Belgium Technical Assistance to the processors to get the HACCP certification, so that helps to have some confidence in those processors and to getting the deal. So, yes, the still a concern, but if we try to work hard, we can get to some good points.
Thank you. Thank you very much for that contribution as well. I'd also like to just add to what you just said. When it comes to funding the value chain, and I'd like to maybe have some thoughts, a comment from the audience at some point, especially in India and in Vietnam. Usually the government will come in at an early stage to set an environment whereby they can borrow and subsidize lending, so that the industry gets to a critical point where then the commercial private sector takes over, because if you look at it, in most industries, the private sector support the industry through balance sheet lending, basically, okay? Whereas in this part of the world, in the African part of the world, usually it has to be on a transactional basis because the balance sheet is too weak or inexistent, and therefore it's usually structured trade finance. It's based on the transaction. So I'll be very interested to hear about how India, for instance, supported its industry to grow to the point where the private sector is now supporting that industry and to reach the point they have reached right now. And I believe it's the same in Vietnam. We know that Vinacas is very active with state banks in lending, to the buyers who are coming to buy the products in Africa and elsewhere, and so that it is at a competitive rate. And therefore, it also impacts the balance sheet. So in Africa, on the other hand, you talk about microcredits. We know that microcredit is usually at a higher cost than regular commercial banks. How are you able to still manage to compete?
Okay. Let me tell that we are not a microfinance institution. We have microfinance institutions as partners, so we can lend money to those microfinance institutions and also to some rural banks. And we can also directly deal with some cooperatives or SMEs, etc. So we have two types of deals. When we are dealing with the rural banks or MFIs, we are talking about other things. But when we are in direct business with some cooperatives, so it depends. But in West Africa, the central bank is also doing some good job. For example, the maximum interest rate on the microfinance industry was around 27%. But since last year, it's lowered to 24%, the maximum in the microfinance industry. And in the bank industry, it was around 20%, but now it is not more than 15%. So that is some proof of the work central bank is doing. So when I take our deals with the Cashew processors, we try to do it at a very low interest rate than what we have in the microfinance industry. When we talk about 10 to 12%, it's far from the 24% we have in the microfinance industry, and it's lower than the 15% that banks can do. And yes, we would like to do less, but we have to be sure that in face of us we have some bigger industries that can take more money and then allow us to stay profitable as lender.
No, absolutely, you're right. I think this is the snake that bites its own tail. Because on the one hand, you will want to see an industry which is vibrant, strong enough so that you can lend at a very competitive rate. But at the same time, someone has to build that industry so that you can reach that critical mass. So should that be the private sector investing, supporting that industry to grow, be the responsibility of the financial sector, meaning the commercial banks, the equity funds, the social impact funds, to actually lend, and take more risk, let me put it this way, and help grow the industry, not only at the farmer level, but also at the processing level, so that it can then become more attractive, you can lend at a more competitive rate going forward. I think this is a long-term strategy that people need to look at, honestly. And I'm sure we will have a chance to hear from the audience about some experience in other parts of the world, because yes, we're talking about Africa here, but really, I mean, this is about how do we finance the value chain as a whole, whether it's India, Vietnam, Brazil, or Africa as a whole. Yes, please.
Just a quick thing. It's all a matter of also risk appetite and risk rewards. I'm talking about responsibility. As I said before, we look at profitable company, profitable value chain, where we can bring extra financing and where there is also a positive social impact. The stage that you mentioned before, I think, is before getting there, before starting to have a positive track record, or a track record of 2-3 years. Therefore, it's more like a development funds in financial institutions, DFIs. Put AFP, Proparco, the German KfW, other type of institutions which are government money, which are extremely patient money, extremely low interest rate, which are nothing to do with commercial interest rate or could be pro bono, grants, whatever, which can bring also huge amount of technical assistance. SAD through TechServe in West Africa is a great example, but I think it's a stage of real profitability where when we're talking about the impact investment fund, so there is the investment fund, behind us there are investors that are looking for a return. They're not looking for a 20% ERR, they're looking for 3, 4, 5%, and they're not becoming rich with responsibility. But they know what they do, and we know what they work with, what they like.
Point well noted. So with all of that, maybe at some point, it is also important to have experts in the field of finance who can advise those who need it the most, and that are the stakeholders who are in need of sourcing funding. Not everybody has the sophistication to understand, should they go for a commercial bank, should they go for a patient capital investor, should they go for a social impact fund, so on and so forth, based on the critical size that they have. If they are very tiny, obviously their risk profile will be such that borrowing at a commercial rate will be prohibited for them. So maybe they qualify for microfinance or other types of funding. Whereas if you are based in Singapore, and you've been developing a business for quite some time, you have a track record, you obviously, will qualify to source from large international commercial banks. So sometimes we feel that it is important to have financial advisors, and we thought we should find out from a consultant. So we've invited Mr. Jean-Guy Billet, who is a long-time banker, retired banker, now a consultant, who has been helping SCA and other organizations like USAID by providing advice and assisting companies to help understand their financial needs and also source the appropriate funding. So my question to you is does that make sense to you? Is it important to stakeholders, especially those who are in great need of assistance, to to help them put together a bankable proposal.
Thank you, Roger. Indeed, when you consider the cashew value chain, for instance, for all of our economies, this is a sector that is very important because of the impact it has on employment, whether it be in rural or in urban areas, the impact that it has on generation of export proceeds and overall socio-economic development. But similarly, it has also been observed that a number of actors within these chains, in addition to other difficulties, whether they be good agricultural practices or good practices for on-farm activities, or even market leakages, domestic leakages or international leakages, they had a significant constraint, which was getting access to finance. So, to help reduce this impediment, a number of donors or organizations have elected to assist those in need in terms of capacity building for their access to finance. And this is the role that we have been asked to play, basically bridge the gap between those in need of financing and those who had financing available or potential financial available, but who could not deliver or supply and cover these needs because there was not proper communication or the proper information provided to them. So that's what we're trying to play, the role that we're trying to play, bridge the gap between those in need and those who have the supply and the funds available.
Yeah, so are there been any fundamental differences between the various funding agencies that you've gone to, whether it's a commercial or an investor or a social impact? What are the challenges? I mean, for you as from your practice in trying to secure funding for your clients, what is the major challenge in the cashew?
Yes, I mean, when you look at the cashew value chain, I mean, you have a number of things, from the on-farm activities, the off-farm activities, domestic trading, international trading. They have a number of needs which relate to, I would say, basically short-term working capital financing and investment financing. But they don't all have the same size and the same sophistication. On the other hand, you also have, in the banking infrastructure or the financial infrastructure, a number of actors, whether they be microfinance institutions, whether they be commercial banks or development banks, private equity funds, that sort of entities. So they are different in terms of their capacity to address the needs of the different segments, but they also are, I would say, that they have many common traits. For instance, whether you deal with a microfinance institution or you're dealing with a private equity fund, they will always ask you, for instance, for a business plan. They will ask you for financial projections. They will ask you for financial statements and a background document, and information. So that's where basically, whether you're dealing with a very simple microfinance institution or with a very sophisticated private equity fund, you have common basis. The difference is then the volume, the size of the financing that they require, as well as the tenor of the financing that they can provide. Development institutions, in most of the cases, can go further. Commercial banks are competing with the other communities. They tend to be a little less interested in financing sectors like cashew, at least in our part of the continent. And then you have players like Oiko Responsibility, who, although they are not based in geographically in our territory, do create an incentive. They play a role of
Good, very good, thank you. What about government intervention? I've mentioned earlier that in some countries like in India, for example, Vietnam, state government plays a big role in the industry, alongside the private sector. Is that healthy? Should that happen in countries, especially in Africa, where everything has to be built from the ground up? The industry is very young, obviously. We have a strong production in Africa. We mentioned this morning about 50% of the world crop comes from Africa. However, when it comes to processing, value addition, it's only 5%. It's bare 5%. How do you build an industry? Of course, it's not so competitive right now, but we are all confident that going forward, with transfer of technology, collaboration with Vietnam, India, and the rest, gradually in Africa, cashew will be processed and competitive. But this has a cost. Who should bear that cost? Should the government create the environment, the incentives to allow that to happen? Should that be driven by the private sector, or should that be driven by development agencies, as Marco mentioned it? What do you think, what is your take as far as the intervention of the public sector and government in the value chain?
I think that each partner has to make. There are a number of measures which the government can make in terms of tax holidays, in terms of customs exemptions that they can provide to help facilitate and improve the profitability of the private promoters. But if these operators and these value chains are to be sustainable in and of themselves, they must gradually be able to stand on their own feet. In doing so, not only will they remain or will they be profitable, but because they are profitable, they will be able to attract additional financing. And if we really want to have the financing to be available on a long-term basis, basically, not only does the value chain need to be sustainable, but the financing institutions need to also bring together, I would say, two key additional factors. One being what I would call a specialized industry knowledge, i.e. having a good understanding of the drivers, for instance, of the cashew value chain. Which means that whether the professional organizations, or whether it be the Ministry of Agriculture, or industry, or finance, they will also need to help these institutions build their internal capacity into properly appraising the risk associated with the different actors in the value chain. And the other element has to do with availability of long-term funding. Institutions like these guys here, have access to a number of sources of long-term financing, which many of the local banks in our environment don't have, because the deposits are short-term and they lend short-term. So they need to have longer-term financing, which they can only, I would say, source from a number of multilateral or regional development institutions. And there, I think that the key role is for the government to indicate the need and the urgency for the development of the economy, to have these sectors supported so that it facilitates the donors' provision of such funding to support the economy. So both parties have to play a role. The promoters have to make sure that they are quickly profitable, but the government has also a role to play to facilitate a number of concessionary funds.
Thank you very much, Andy. I think with that, we would like to open the floor for any questions that you may have. after the contribution of those three great guys, I would like to applaud the intervention, if you don't mind. Thank you very much. And we open the floor for any questions. Okay, well it looks like you guys did a great job, there's no question. So with that, I'd like to say thank you again.
Marco, any responsibility?